Hey friends, my name is Sahil and this is my Personal Finance Academy. If you are an IRCTC investor, then it would be a roller coaster ride for you. Even I have myself invested in IRCTC and it has been a roller coaster ride for me as well. In the last 6 months, IRCTC share price jumped from levels of Rs 1700 to levels of 6395 and crossed the market cap of 1 lakh crore rupees. So IRCTC share got more than tripled in just 6 months. But in last 1 week, IRCTC price has tanked 35% from its peak. It touched a peak of 6,395, but from there it crashed to the level of 4,000 rupees where the market cap reached the level of 70,000 crore. If you have been following my channel, then I have already created a video on why the share price jumped nearly 300% and why it tanked after that. However, there was a major development on IRCTC share on 28th October where the share price was split into 1:5. And then the share jumped nearly 17% on 20th October after the stock split. However, today the share tanked 20% in the morning due to a big announcement by Indian Railway. Although the share price recovered later after another announcement. So a lot of people are confused about the stock split and why IRCTC share tanked today and then why it recovered. Hence, in this video I will try to explain the logic behind the stock split and then I will discuss the reason for sharp correction of 20% in the morning and then the recovery. Finally, I will also share my take on the entire scenario and what you should do as an investor in IRCTC. Alright, let's get started. On 20th October, IRCTC split its share price in 1:5. So let me help you understand the impact of the stock split. If you already understand the impact, then you can skip this part. Now the stock split of 1:5 has two impacts. First impact is that the share price would get divided by 5. And second impact is that the total number of shares would multiply by 5. For example, IRCTC was trading at level of Rs 4,100 before the split. But then, after the split on 20th October, it was available for Rs 820. And let's say, if you had 10 shares of IRCTC, you would have 50 shares. So earlier, if 10 shares were available for Rs 4,100, your total investment value would be Rs 41,000. And after the split, the share has become Rs 820. But now you have 50 shares. So your investment value would still be same, that is Rs 41,000. It means from market cap perspective, net there is no change and from investor perspective, there is no change. A lot of people got confused after the stock split. Some people even thought that the share has corrected from level of 4,000 to the level of 800. But please understand that this is a stock split and not a correction. By the way, after the split, you would be seeing wrong data in your trading account. So the price has been corrected, but you won't be able to see the additional stocks in your portfolio. It is because the stock split adjustment takes a couple of days to reflect in your trading account. So wait till Monday to see the newly allotted stocks. So if you are holding 10 stocks, it would show you 50 stocks from Monday or Tuesday. Now why has IRCTC split its stock in 1:5? The answer is to increase the liquidity. The share price reached a level where it was not possible for normal retail person to invest. Hence, they split the stock to make it easy for retail investor to invest their money. If you look at IRCTC chart on Google, you would now see that the chart has adjusted the stock split in its entire historical value. You won't even see that IRCTC has touched the levels of 6,000 rupees. In fact, the Google chart is not showing the right data. You can check the right data on Screener website. So don't get confused with stock split. It doesn't mean that the share has corrected heavily. If you want to learn every aspect of stock investment, you can explore my course on money management. Yesterday after the stock split, IRCTC share jumped nearly 17%. Although later, it got settled at around 10%. However, yesterday evening, there was a big announcement from Railway Ministry. The announcement was that Indian Railway has decided that IRCTC would have to share 50% convenience fee with Indian Railway. But stock market investors did not like this move. Right after this news yesterday evening, today morning, IRCTC share tanked 20%. Now was that a big amount? A big no. With that convenience fee, Indian Railway could have earned additional rupees 150 to 200 crore. However, that one move resulted in fall of 15,000 crore in IRCTC market cap. Yes, one wrong move from Railway Ministry to earn 150 to 200 crore from convenience fee resulted in 15,000 crore fall in IRCTC market cap in just 1 hour. IRCTC share tanked 20% in the morning. And that's where it is very important to have the right leadership so that you don't make such wrong decisions. Immediately, they called the high-level meeting today morning and then decided to scrap this decision of 50% convenience fee. And after that, IRCTC share price recovered but still ended in red. So the big takeaway from this entire incident is that PSU stocks are risky. Although I must commend the team who decided to roll back this decision within an hour. Otherwise, it takes weeks and months to roll back such decision in a public sector company. But I would say that the damage has been done. If you have been following my channel, I never recommend PSU stocks. I once created a video on top 100 plus stocks and you can check I don't have PSU stocks in that list. IRCTC is the only company I suggested because it has the monopoly in the business and a bright growth prospect. However, it always had one risk, the risk of changing policy from Railway Ministry. And today it has been proved that one wrong decision can literally damage the entire company's reputation and destroy shareholders' wealth. So what should you do as an IRCTC investor? Well, from here, it is very tricky. I've always recommended this stock due to its monopoly and high profitability. But this move from Indian Railway has really made me worried and made me realize that it is very risky to have PSU stocks. I think this is the reason why PSU stocks do not perform well, because they are for the public. Their interest is to serve people and profits are secondary. Also the fact that leadership is very important for a company and we all know how public sector companies operate. And that's the reason they fail to create wealth for their shareholders. If you want profit, you need to invest in private companies. Now IRCTC will declare its quarterly results on 1st November and the results are expected to do well. So hopefully the share price would recover. But one thing is for sure, that the move from Indian Railway has shaken investors' confidence. Honestly speaking, personally I am confused about should I offload some shares or should I continue holding all the shares. On one side, there are bright growth prospects, but on another side, there is a risk that what if in the future the Railway Ministry come up with another decision that could hamper IRCTC profitability. So what is your take on this? Are you going to hold this stock or are you going to sell it? Or will you use this opportunity to invest more? Tell me in the comments. But there is one very important lesson from this incident. And the lesson is that diversification is very important. I have a thumb rule that I don't invest more than 10% of my wealth in a single stock, no matter how good a stock is. I make sure that I don't invest more than 10% of my wealth in it. Now, what is your take on IRCTC? Tell me in the comments. I'll see you in another video. Till then, take care.